Well, it's become quite a common theme at the moment doing these late night videos and talking about what's going on in the market. And once again, we're talking about, unfortunately, a bit of negative stuff that's going on in the market. And today was one of those days where the market just kind of gave up with it coming towards the weekend, the end of Q3. So that does mean we've got earnings season coming in a couple of weeks' time, especially that kind of last week of October around that Halloween period. That is when we'll get a lot of the big names coming out of earnings. But yeah, the end of Q3 and a new low for the stock market. And yeah, this was really a day where the market kind of just gave up. It was one of those days where, as we know, there's a lot of fear out there at the moment, a lot of negativity. And even though there wasn't extreme news, it was just one of those where a lot of investors went, you know what, let's just kind of sell before going into the weekend, take a bit of risk off the table. And there was a few news stories out there and they were taken quite negatively. And yeah, just one of those days that kind of just shows you that fear is very much in control of the market. And what was interesting about today is that we actually did all right. Like, the market opened up, we had a bit of a rally up. A lot of stocks were performing quite well. You can see the S&P nearly had a complete 1% reversal here. And then just as the day carried on going on, it just went lower and lower and lower, especially into the last kind of hour, 2 hours. The sell-off just got more and more aggressive. And that puts the S&P now down 25% year to date. Very much in a crash situation, the worst stock market we've had for such a long period of time, which we've talked about, on the last kind of couple of videos. The Nasdaq just gets worse and worse, down 33%, and this was exactly the same. Had a pretty good rally, obviously a little bit more than what the S&P did, and obviously on the downturn means it sold off more than what the S&P did. And same again, last 2 hours just weren't pretty for the Nasdaq as well, and down 33%. So there's a few stories I think kind of built up, and that positivity that we kind of had, I think just these few little stories just played on investors' head, and with the negativity that we're on end of Q3 just spooked a few people kind of going into the weekend. And investors kind of just went, you know what, let's just give up here and let's just sell. So one of the first bit of news that came out here is the second in command of the Federal Reserve here, or the Fed Vice Chairman, basically came out and said, yeah, we know there's a few issues in the world, but we're still going to carry on rapidly increasing rates. And even though, I mean, I don't know how many times we've been saying this recently, even though we know the Fed have historically stuck to our priority is to raise rates, it is to get inflation downtrending towards a normal rate of around 2%. That is the main priority, and they've consistently said that. And once again, this was backed by the Vice Chairman, who said that we can see there's a few issues going on in the world right now, but our priority is still to carry on raising rates. So they're basically still saying what they've been saying for the last few months, and I think that kind of negatively impacts the stock market. And obviously this was 8 hours ago, and as a recording this video here, that would roughly line up to where we started to see the stock market downtrending, funny enough, on the day here when that was really came out. So that was probably one of the big issues that kind of pushed the market down. The next one was Nike. So this might have just added to it. Obviously this was, even when the market was rallying up, Nike was being dragged down. Nike is now $83, and that does mean that Nike is now at a position that it was lower than before the CV time. So you can see here, like January 2020, it's now 18% lower than that time period. And I mean, Nike is kind of going, all the way back to levels now it was in 2018. So yeah, Nike has had 4 years of share price appreciation, basically wiped out the business, which is crazy to see. Such a big brand like Nike to be destroyed like that just is another one to add to the list. And 22 times earnings now. Obviously, I would say still a little bit of still a high valuation, but it is Nike at the end of the day. 1.4% dividend yield as well. And Nike came out of their earnings, there was a beat, but there was quite a big beat on the revenue side as well. So the EPS was pretty good, the revenue is pretty good. The revenue actually was 3.6%. Now, we actually talked about this previously, I think it was 2 days ago, when we compared the current stock market to 2008, and when Nike was on that list, and we talked about that even this company that had some sort of impact was still performing very well in such a bad environment. And Nike's very similar. I look at that and go, 3.6% growth and decent amounts of profit in a period of time that's, so many pressures going on now. It's actually not too bad. And the thing is as well is if you actually break down the revenues, I don't think it actually has it here, but if you actually dig into the revenues of Nike, like all the other sectors actually grew really well. The only sector that was massively pulling it down was the China segment. And obviously, as you know, they've had a really tough period of time where they're basically shutting down the economy, and obviously stores are shutting, everything like that. So they are going to have some impact. So you take that impact out, and it's not too bad of a period from Nike, in my opinion. Now, there was some gross margin decrease, which they put down to the logistic issues. I think as well as that, there was obviously having to cut products and maybe selling them at cheaper levels as well. So obviously that wasn't a great point, but I mean, name me a retailer that isn't having that at the moment, So I think that was to be as expected. I think a few people were actually speak by this. Inventories were up 44%, which is a massive hike. Now they did say that was to an ongoing supply chain, but yeah, that's a massive increase. I mean, is that, you've always got to look at businesses when they do these earnings reports. They never, a company like Nike's never going to come out and say, our gross margins declined because we had to sell our products at cheaper prices because they weren't selling. They can't use them words. Imagine putting that in your earnings report. That is 101 how to create your own share price. You're never going to see a public company do that. They've got to try and be careful on the words they say. So maybe they'll say like, oh yeah, it was supply chains that was impacting us, when realistically there could be some issues with them selling the products at cheap prices because they can't sell. It's very much like this. There was, say, we had to make sure we had high stock because of the issues. We get cheaper shipping, or if there's a delay in the shipping, we've got to make sure we have them and stuff like that. But that could be looked at a period of time where, they have got higher stock because they're struggling to, shift the products as much. You look at that from point of view. So maybe that spooked a few people. But overall, I thought like the earnings from Nike were okay, considering, you look at the likes of like Boohoo, for example, ASOS, Next, Revolve. There's so many businesses coming out and saying this is actually really tough, and I thought Nike's earnings weren't too bad considering, but yeah, that absolutely got tanked. Micron came out, their earnings were pretty much flat, trading down at 5 times earnings. It does pay at nearly 1% dividend yield. Their earnings were so-and-so. The EPS was a beat. Revenue was a bit of a miss by 140 million. They did decline 19% year over year, but operating cash flow was actually holding on okay, which was actually pretty positive. So I was quite surprised to see a company like this come out with, and also on the outlook. The outlook was actually a little bit weaker than what was expected, but I was surprised to see this one hold up very well. Maybe it's just kind of got to the point where this has lost half its value, and everyone kind of looked at it and went, 5 times earnings, yeah, that's enough for that one to not sell off any longer. But the kind of chip pain kind of continues there. But yeah, I was surprised to see that one actually hold up as well as what it did. CCL back at $7 and down 23% today. This was a massive move downwards, and this is one that's been killed off. 67% down year to date, and you'll actually see that this one is now this is actually below the CV levels. So yeah, which is just crazy. That peak kind of fear day, the 3rd of April, that it's down 17% on that day, and that's a travel stock, that got, hit massively. I don't know if you remember that day. I remember the news when there was all them people that were stuck on them, cruise ships, and they couldn't get off because there'd been an outbreak of the cases in them and all that, and that's such a bad period of time, and now it's even lower than that. And Carnival basically came out and said that they missed on EBITDA as well, and it also came out with Q4 below its historic normal range as well. So the guidance obviously looking a little bit weaker. It did say that advanced bookings for the full year 2023 were actually higher than 2019 sailings, and also above the actual historic average price as well. So the bookings are bringing in more money and actually pretty positive. So they gave some positive news in 2023. Once again, they would have to give some positive news after an earnings report like this they brought out, which wasn't great. So they had to give some sort of positive news, but people clearly looking at that one, oh, that's not good, and then looking at Q4 and saying that's not good. So kind of ignored the longer term picture and looks directly at the short term, went, that's not good, and CCL got absolutely destroyed as well. So I think maybe the combination of the negativity that we're in, the Fed comments, the Nike news, micro news, CCL news, just kind of dragged the market down, and everyone kind of went, you know what, let's just give up on any sort of rally here today. Let's stop this rally, and let's just take any kind of risk off the table going into the weekend, and we'll see where we're at in Monday. And Monday will lead us into October, and October will lead us into Q4, the last quarter of the year. So the key points is we'll be staring at the new inflation data and seeing if that moves hopefully back into it's been moving into a positive direction, but making sure that's moving in a downtrend and hopefully dropping at a very good rate. That hopefully gives the market a little bit of confidence, maybe kind of calms everyone down and go, okay, that's really starting to move down. Okay, the Fed might chill out a little bit with these hikes on the interest rates. So that's obviously a key date that will be coming up in 2 weeks' time. And then probably like the next kind of 3 weeks, 4 weeks. Obviously we'll get the banks first, and obviously in 3 weeks' time we'll get the banks, and they'll be kind of giving us some information. Key thing will be to see default rates there. And then obviously we'll start moving into the peak earning season, and we'll get a good amount of financial data from a lot of businesses and seeing what they're saying. Obviously moving into this period of time, the outlook they're giving into Q4 will be very key, and how much of a hit they're seeing or a slowdown they're seeing will be massively key. So we enter a bit of a period now where we're a week or two away from very key data, which should see how we're doing out there. And if obviously at the moment the negativity that's being priced in this month, which is an awful month, if that was very much justified. But yeah, at the moment, once again, it's a tough time out there. It's a tough time, especially one of those days where you think, oh, we're going to have a little bit of respite, and then it just gets dragged lower. It is a tough time, basically, nearly everything's been hit. And we, like I said previously, we are in the worst stock market since 2008. Technically, we're actually having a worse stock market than 2008 at the moment, if we compare it on the same time period. And it's awful. It's an awful time period as an investor. And unfortunately, we knew one of these days was going to come at some point. However, going back to my video 2 days ago when we mentioned a company like Nike, which is very much having, I believe, I don't know if this is correct, but I actually saw someone say that they are currently on a dip now that is worse than the 2008 crash on a percentage basis. So yeah, and we saw how that played out, and I think that's the key thing, is that it's tough, it's hard to stick in there. However, I very much believe that when we look at that 2008 period and we saw great businesses dipping that were still fundamentally quite sound, even if they are going through a bit of a tough period, but are still very much, in the longer term, 3 years, 4 years, 5 years, going to have a very good future, and we will move out of this situation. I do think there's very good buying opportunities out there. So yeah, that's a little bit of an update on what kind of went on today in the sell-off and things that where I'm kind of at with the market, as you kind of know from the last 2 videos that I made anyway, guys. So hope you enjoyed the video. I might make a video talking about the stocks that I've been buying recently. If not, I'll probably drop that on Monday. You guys on the Patreon, I will drop the one more exclusive video on there tomorrow or on Saturday, so do keep your eyes out for that. But apart from that, have a good weekend, and I'll see you guys in a bit.